Hey everyone, thanks for joining us here today. I'm with my colleague Chris Law, and we are going to talk about interest rates. I think that's been something that's kind of top of mind for a lot of our investors and just a lot of people have been chatting with recently. So I'll kick it off with Chris then. So, like, what is happening with interest rates? Let's start with that.
Yeah, for sure. I mean, I'm sure everyone has been hearing things in the news, on the radio, and pretty much everywhere you turn now with real estate interest rates projected to go up in the, probably Q2, Q3 of next year. Bank of Canada trying to temper the inflation, as everyone I'm sure is already also talking about with cost of goods, even like, groceries, gas, just, substantially higher than
Yeah,
even
everything's
like
going
six
up.
months ago.
Yeah.
Definitely.
Yeah. So I guess in terms of the speed that we're going to see these rate increases at, I I think there's either two scenarios. One, it's going to be the Bank of Canada rate, and that will be climbing slowly because we can't really have a fast increase in rate without impacting things beyond real estate. Because a lot of people think, an increase in interest rate, oh, it's going to affect my mortgage. But these are, the Bank of Canada prime rate is used for business lending, it's used for commercial lending, all sorts of stuff. So, and those are sectors that necessarily haven't quite recovered yet. So, they're going to have to take a slow, methodical, well forewarned approach to any sort of rate increase, or they separate it and only increase mortgage policy, so jump rates and things like that, to try to slow down the housing market while trying not to impact some of the other things. It's a little tough to do, but we're going to see one of those actions. Either way, it's not going to be very quick. There will be a lot of forewarning. So, Chris, in terms of that, if I think everybody's expecting some sort of rate increase happening. How is that impacting the market right now?
Great question, Ming. Definitely, I would see a lot of our clients, just feeling a little bit more urgent around purchasing their next property, like just a little bit more around, I wouldn't say quite the level of panic, but definitely a bit more. There's some urgency around, like, okay, I definitely want to be, in my next property before that hike. They're concerned about obviously carrying costs, maybe competition, as you talked about, maybe more people rushing towards getting a house because the rate is gonna increase. So historically, we have had people trying to pull the trigger, get that property before any kind of rate hikes by the Bank of Canada. So I don't really see this being any different. Again, our current clients and any other clients probably coming out of the woodwork in the next few months, trying to pull that trigger ahead of any rate increases. So definitely more FOMO, fear of missing out, starting to definitely take hold of the market. I feel right now.
Yeah, yeah, and we've said it many times during our meetups that the interest rate, it's an influencer. Obviously nice to get in on a lower interest rate, but things move in lockstep. There have been successful investors for the last 20, 30 years who were investing in double digit interest rate markets. It's not an impossibility. The math just needs to work out. But not everybody has that mentality or that approach. So definitely seeing some of that. Um, in terms of the housing price impact, is something that I get asked a bunch, and it came up during our last meetup as well. If I had a crystal ball, where do I think things are going to go with housing prices because of these interest rate hikes? And I was just saying to Chris before we started recording that this is one of the toughest times to actually figure out what's going on, because on one hand, we have high inflation, we have interest rates going up. These are things that will put a damper on housing prices. At the same time, we're trying to get through a backlog of immigration to solve a massive labor shortage that we have. So, and then to layer on some extra fun, Omicron is rearing its head in Canada now. So, what will that mean for the housing market, it's very hard to say. I think more than ever, it's really important to get into a good asset in a good neighborhood, in an area that's going through gentrification, so that way long term you can ride out these kind of short term impacts. So that would be my advice. I think that's it then. Well, thanks a ton, Chris, for your input today, and hopefully this is helpful for everybody. If you're looking for more information on this, or you're interested in investing in the Toronto market, you can find us at www.volitionprop.com, or follow us on Instagram at Volition Properties. Thanks very much. Take care.